All right. Well, welcome everybody. For those that don't know me, my name is Jeff Scott, um, aka HGSI Doc. I am not affiliated with HGSI, although probably in about a half hour you'll think I am. I welcome you to today's program. I know many of you have been to webinars I've done before. It's been way too long since I've done my last live one. I decided to start another company, and that keeps me busy. It also allows me to keep my wife shopping. But truth to be told, I shop a whole lot more than my wife shops. And I bet Myrna, if she's on now, she knows what I'm saying. So, many of you have heard my weekend reviews where I do a top down, where I talk about the markets, look at the leading industry groups, and then I make trading decisions based upon a top down approach. I always run out of time before I do the bottoms up. And what I decided for today was I do the bottoms up and show you how I use some of my favorite programs to drive certain behaviors. So what we're going to do is I'm going to go through a series of slides. And the reason for the slides is because those that are new to me or new to HGSI will not stay on past 5 minutes if I do charts right away. And even if you've been here before, I think it always helps to have a review of the indicators. So I've got a medium-sized deck. My goal is to be done with the deck at the 20-minute point. And then we'll go and we'll look at charts. Now, you all know that I lie. It'll probably take 30 minutes, but I'm going to do my best to get done. A couple of things. You've been typing your Y's and Z's for me in the question box, and I am going to be monitoring it. That's why I wanted to get my second monitor set up. So if you have questions, I will be paying attention and addressing them. And although I made a comment in the invite that I don't sell anything, small fib, but you'll forgive me because I don't really sell anything of my own. And I just help some of my buddies who I think do a great job. So there's no cash flow to me from doing this. People may ask, why do I do my webinars? Why do I do my things on Sunday? I've been very fortunate in life. I'm a physician by training. I got bored, and in the late 90s, I started a series of healthcare companies. My partner and I have sold these companies for over $1 billion. Of course, I'm the dumb doc who doesn't like to take risks, so I had a much smaller part than my partner, but we've been very successful building these companies. And he compelled me to come back to do another one. So what does that have to do with this presentation? What it has to do with the presentation is I love to teach and I like to trade, and it's just a way for me to give back. So I don't ask anything from you except to enjoy this and hopefully learn something. So let's kick off the show. Disclaimer, this is for educational purposes only. Any recommendation in the spirit of education and not investment advice. I'm a doctor, not a broker, as I already pointed out. And the funny thing is most physicians I know have lost money in the markets. I'm not affiliated with any software vendor or trading company. And the tools I demonstrate are those that I use in my daily trading. And I mean this, I have paid for every tool that I show you. I paid for John's indicators. I paid for HGSI. And I paid for EdgeRater at some point in the distant past. And I think that's important because nobody's giving me anything for talking about their programs nor paying me. And of course, the ever present trading involves risk, and you alone are solely responsible for any decisions that you make. I believe to call out the people who've influenced me the most, and they're on this page. And if you've been here on the Sundays, you know what I'm going to say. I started as a can slim trader with William O'Neill, and I learned a lot from that, from reading his books, reading his newspaper, listening to the videos, the audios, doing some of his how to make money in stocks live training courses. I learned what a good stock looks like fundamentally. I learned a lot about chart patterns. I learned about position sizing a little bit. Learned a lot about stop loss and not blowing my nest egg. I'm not convinced that his stuff is as relevant, and that's a dangerous thing to say. And why? Because this market hasn't been given the traditional cup and handle breakouts and making lots of money. You look today, example of Mobileye, great earnings. It broke out, it fell back, dove pretty hard, and finished the day still down, but made up at least half of its move. Morales and Catcher are ex-O'Neill traders. And, you know, Gil has some comments that he'll make from time to time about what he thinks about canceling today. But Gil came up with pocket pivots and Bible gap ups. Him, Gil, and Chris Kacher. And we'll talk about them tonight as perhaps easier or quicker ways to get into a trade. They also wrote a book about short selling, which will eventually matter. Up here, may he rest in peace, we lost a great one this year. Ian Woodward on the left. He grew up in England, came over here, worked for Xerox, had all his money apparently in Xerox at some time. And then he started getting interested in investing and trading. And he basically talked about how he listened to O'Neill on the radio every week. And he ultimately took a lot of O'Neill's teachings and I think improved them. And his partner, Ron Brown, over here are Woodward and Brown Investing. As I mentioned, we recently lost Ian. Ron is still very active and has great videos on a weekly basis. And I'll show you where to find those at some point as well. Down here is my friend George Lee. I'll mention his name as we go. Great trader from Canada. Van Tharp up in the right-hand corner. Big book, but it's all about position sizing and money management. Things that are extremely important if you don't want to blow your nest egg. You can make a wrong decision if you bet the right way and don't literally bet the farm. You can live to fight another day. And then someone who I'll talk a lot about today, who, I didn't know this guy from Adam 5-6 years ago, maybe 7, when I bought his indicators for Trade Navigator and then TradeStation. And to be honest, I probably didn't use them very much for a few years because like everything else I buy, it looks pretty, then it's no longer shiny and I move on to something else. And then I started paying attention to this is John Person, paying attention to trade shows. I read his books and started seeing that there was something to his stuff. And then I realized when I moved to Palm Beach County that his office was about, well, it's probably just across the water from where I lived in my condo on the ocean. So I walked into his office one day, we become fast friends, and now I guess I'm a power user of his stuff, and I rely upon it extremely heavy, and we'll talk about that. Here's the soft sell. John's having a seminar in September 24th, 25th, and 26th. When I copied this and pasted it, it was $1,478. I'm actually having a one-day on Friday. I don't do this to make money. I do this to not lose money. And I'm charging $400 including lunch, $300 for those who are attending John's seminar, and it will likely be at the same place. Now that I've got more than I anticipated coming to my meeting, I've got to get a bigger place. My approach to trading. I'm going to talk specifically about the yellow today. I should have made the I swing trade stocks and options yellow. Typically my trades last a couple of weeks. I'm happy when they last longer because that's when I make the big bucks. My favorite setup is to find stocks in a long-term uptrend and then pick them off at support when they have momentum coming in. Again, I find that criteria for that setup, which is pullback to support, and I take the trade with the trigger, which is momentum. And I'll show you how I look for that, scan for that, and how I act on it. I know my target and my stop when I place a trade. I also have to know the environment that we're in. And clearly the environment that we're in is an environment where you get a quick pop and then you give up your gain. So I think it's very important to recognize that and take profits. And the little thing on the bottom is true. I do own and have tried almost every software program on the market, and all I need are the ones I'm showing you today, and probably less. Whoops. You're not going to do this to me and make it hard. Okay. So I'm not going to talk much about this slide, but you need to have a plan. You need to know what you're trading for. I trade for growth. I don't need income right now. Maybe I'm a little speculative. I do care about wealth preservation, so maybe I trade for multiple things. How much time do I have to get there? Well, I'm not really worried about the short term, but when I get in my 70s, I want to make sure I have enough money to support my buying habits. How much can I afford to lose? Because you're all going to lose money. I have my number, What are you going to trade? I do stocks and options, and I dabble in futures, and I do a lot of ETFs. But typically, I use them as surrogates for a sector like gold. Sometimes I use the 3X's. I use them to go long or short at a market, spiders, TZA, TNA. And I need to know the difference between trading and investing. And frankly, that cost me a lot of money. Where I went from an investor and keeping my positions a really long time, which was great if you started investing in March of 2009 and stopped in 2015 early. But over the last 18 months, you've had to be a trader and take your profits when you got them. Although we could certainly talk about the last few weeks have been incredible. How much capital do you have? That has a lot to do with how many shares you buy. How much are you willing to risk? What's your optimum number of positions? And we're going to talk today about setups and triggers. You need to find a way to track your trades. I find that just looking at my balance in TD Ameritrade or TradeStation isn't enough. I use both Gameskeeper and TradeLog. I probably will drop Gameskeeper once I've transferred some of the old information over. And I keep a journal where I'll take a PDF of most of my trades, why I took the trade, and then I'll look at it when I close the trade and see what I did right, what I did wrong, and then I file it away for when I'm bored or mad or happy, and I look at what I did. So when I look at position sizing, when I do my charts of the week, I basically play off of this model. I assume I've got capital in my trading account of 400,000. That's probably a big number for many people, so just take away a 0 or 2. I know that my goal is growth. I'm willing to risk 4% of my capital at any time. So that means I'm willing to lose $16,000 tomorrow or $16,000 for every 400,000 and not kill myself, not be unhappy. So I can have 4 stocks risking 4,000 a trade, 8 stocks risking 2,000 a trade. If I have 8 stocks risking 2,000 a trade, then I'll figure out what my stop is. If my stop is $2, then I could buy 1,000 shares in a stock. If my stop is 50 cents, I can buy 4,000 shares. So the risk I'm taking from my stop dictates how much I can buy. But I also have to remember that nothing's perfect, and that even though a trade looks great and my stop is set the right place, I could have attack, God forbid, in the U.S. tonight. Something could happen in Asia. The EU could raise rates. That would be a shocker. And my stocks could gap against me tomorrow morning. The scary thing is I do a lot of biotech. And last night, for example, Celgene came out with some bad news. They released results of a trial, and there was a gap in Celgene at the open down today, at least in the pre-markets. I had no way of knowing it because it wasn't an earnings announcement or a planned announcement. So that's one of the concerns I have in all my trading is gaps can kill me. And then it's much more than finding my favorite setups. I got to know the entry, my initial stop, the shares, again, managing. I often bulletproof my trades with options, which I'm not going to talk too much about today, come in September. And I have various things that I do when I think the market's going to tank. So let's talk about how I trade my favorite setup. I've built a toolbox over the year of my favorite indicators. I got this from observing others, attending the PV meeting for HGSI, and I've listed them here. Some came from HGSI community. Some came from George Lee, who learned them from other folks, perhaps. And then John Person, his stuff. Now, I'm going to go further and talk about those in a few minutes. I always want to know where we are in the market. You know that I do this slide every time I do my top-down review over the weekend. And, where we are is important because it affects what I do from a trade perspective. And we came down here pretty hard, but we've been in this nice uptrend, stage 2, for the better part of a month, and we'll talk about this. We'll look at charts, and I won't be guessing time frames. But I have to know where I'm at. It tells me whether I'm long or short. Am I all in or not all in? It's been a while since I asked. Just type a Y, and if you guys can still hear me, a couple people. Okay, perfect. It's the reason why I like doing my webinars by myself and then posting them is if I screw up, I can go and repeat them, and no one knows I screwed up. All right, so we're going to focus on the stars today. These are my stars, my all-stars of trading. They come from a lot of different places. I'm going to define them for you, and I'm going to show you how I use them, and I'm going to look for them as time allows in TradeStation, Thinkorswim, and in HGSI. And first thing is, how do I find a stock that's pulled back? Well, I want to find a stock that's pulled back to the 50, pulled back to the 200 moving average. It's gone sideways for a while. Well, I'm going to show you my bongos, and my bongos are a timing indicator, and I'll show you how I use those, and similarly the force indicator from Alexander Elder to find stocks that are pulling back. I'll talk about the squeeze. John Carter, I don't believe John Carter invented the squeeze, personally. He did invent the TTM squeeze indicator, which combines a squeeze plus a momentum indicator, and he sells it as the TTM squeeze indicator. It's free on TOS as well. But I'll talk about how I use the squeeze. I'll tell you what free parking is from Ian, and then I'll show you a little bit about the HCDs and LCDs in a slide, but I'll really show you how to use them in a program. And then for momentum, I'm going to introduce you very quickly to the kahunas, Morales' pocket pivot and Bible gap up. I don't have a slide about PSAR reversals, but I'll talk about it when we're in a slide. MOBOs, and then the PPS indicator. There are zillions of other indicators. I bought zillions of indicators in my time. These are what I use every day, and you'll see how I incorporate them to find my favorite setup. Let's talk about a bongo. A bongo was created. I'm one of the inventors of this, so I probably use it because I convinced myself how great it was when I invented it. And what the bongo is, it's simply looking at a long-term and a short-term, a weekly and a daily, looking at two things, a price versus a 9-day SMA, and then the RSI, and you have to have the 8 over the 14 over the 19 in that order, and price above the 9-day smooth moving average at the same time to trigger a long signal in a bongo. You trigger a short signal in a bongo when the opposite two criteria. Once I signal a long or a short, it stays in that direction until both of the opposite signals fire. And you'll find that if you just use the bongo weekly as a filter to find stocks in an uptrend, it's a pretty darn good indicator. It's not the fastest in or fastest out, but it sure is reliable. But I find that when I'm in a long-term green on the longer-term indicator, and then the shorter indicator goes red, that's a period where short-term I'm pulling back in a long-term uptrend. That might be a vehicle to find a stock pulling back. The squeeze indicator is, again, something that John Carter talks about, but all it is when the Bollinger Bands contract inside of the Keltner channels. And it identifies a period of time when there is contracting volatility. Why do I like the squeeze? When it's mustard, it's squeezing. Squeezing does not tell me direction, but I find that I get sometimes a pronounced move when I break out of a squeeze. So I know John Person is not a fan of the squeeze. We've talked about it. And at his cruise, I was there, and I actually commented that I do find a squeeze valuable. It's not a trigger. It's not necessary for me to take a trade. But when I see a squeeze, I know that I found the stock that's basing or pulling back. And then when it breaks out of a squeeze, I like to take those trades using my specific triggers. And I find it complementary, and I find it a positive thing to use. It is built into HGSI. It's built into Thinkorswim. Free parking is very simple. If you look at this picture of Micron from probably 2 years ago, doesn't really matter when, a little bit less than 2 years ago, would you not have wanted to buy the stock every time it touched the 50-day moving average? Well, what Ian used to teach us when the early days of Ian, he was just as good up to the end too. But in the early days, we had a lot less to talk about because he hadn't invented all these different indicators. He always said that a great stock will often come back and test the 50-day moving average. And that 50-day moving average he called free parking. And that when I find stocks in an uptrend that pull back to that 50-day moving average and have a momentum signal come in at that 50-day moving average, I'm in, baby. That's one of my favorite setups. And this slide tells you why. Because there are other people out there waiting for free parking as an opportunity to buy. So we'll come back to this. I use this setup over and over and over again. I don't have a great example of an HCD and an LCD to show you. I've got this one. I'll show you more on charts. I don't like using anybody's stuff without their permission. I hadn't asked John if I could use a couple slides that he gave at a recent presentation. But all an HCD is a bar that occurs within 3 days of a doji. So there's a doji where my arrowhead is. And within 3 days, day 1, day 2, and day 3, I traded above the high of the doji as a high closed doji. Or over here, 2 days after a doji, I traded below the low of the doji, which is a low closed doji. In my history of John signals and all my trading, an HCD occurring in a downtrend, an HCD on a weekly chart occurring in a downtrend at support, in the support area, with a on-balance volume that's going up while the stock is going down, is one of my favorite signals. And we'll show you how I find those in a little while. Then I look for certain things that show me momentum. The kahuna, I mean, sometimes Ian's definitions kill people. If you know Ian and spend time with Ian, you love his definitions because he's hilarious. And he was such a great lecturer and teacher. A kahuna only signifies a big move. And we signify a big move by the percentage that the stock moved in a given day between the lower Bollinger Band and the upper Bollinger Band. And a little kahuna is a 24% move. So it's moved 24% of the distance in a Bollinger Band. That occurs relatively frequently now, but it tells me that there's some momentum coming in. A big kahuna, which is a darker blue, is a 40% move or higher in one day. And when I see a big kahuna sitting near support, something's happening. So I watch these closely. And these are kahunas to the downside. Momentum related to percent B, and we'll show you on the charts. Force is from Alexander Elder, and it looks at force index as volume today times close today minus close yesterday. It is plotted, and then you look at a 2-day and a 13-day exponential moving average of that force. I use force a lot of different ways. These rules are from John Alexander Sarkit, who is his interpretation of how to trade using force index. The reason why I look at it here is because I wanted to have the definition, and I'll show you how I use it. I didn't invent it. I may use it differently than Elder. MOBO, there are MOBO bands, and it's basically a Bollinger Band, the green one, which is of a different setup than the traditional Bollinger Bands. And you look for stocks breaking out of these modified MOBO Bollinger Bands. And I look for modified Bollinger Band breakouts and breakdowns. And I'll show you on charts how I take those trades. I don't find these to be the most useful by themselves, but they're great ways of filtering out stocks, looking for stocks that might be breaking out. And so I could use them in scanning. And they're also, when I see a stock in a squeeze with a MOBO breakout, a PSAR reversal, a kahuna, and a pocket pivot in the same day off of support, I won't say what I have because there's women on this call, but I get kind of excited. So I use it to increase my excitement and help me to filter and scan. Pocket pivots, and I'll make this handout available to anybody that asks. Pocket pivots, this is from Morales and Catcher, and basically it says that your move today, if you let's say you pulled back into the 10-day moving average and then traded up on the day, and your volume today to the upside was greater than the highest volume to the downside in the past 10 days. That's a pocket pivot. And rather than waiting for a full cup and handle to signal that you had a cup handle breakout for can slimmers, they use the pocket pivot as a faster acting, earlier firing indicator. Often it correlates with how Ian used to do his 405 exercise and show us an earlier buy point on the right side of the cup, an earlier buy point before the cup and handle. Buyable gap ups, there's guys that lecture about gaps all the time. I still don't know, when do I buy a gap, when do I fade a gap? And then I learned about this. This is a very simple formula. A buyable gap up is 0.75 times the 40-day average true range. That tells me how much it gaps. And the volume is 150% the 50-day moving average of volume. And this is a very powerful signal from Morales and Catcher. And when those things both fire, I have a breakup that I may want to start buying or chasing. And they have very specific rules about when to buy them and when not to buy them and when to close the trade. So before you would take those trades, I would hope that you would actually maybe go and buy their books. And they're not paying me to promote their books, by the way. But you might go and buy their books and figure out how to use their signals to make the right trade. I'm just trying to cover the definitions so that when we get to the charts, I don't lose everybody. And if I do lose you, I apologize. Download the video, download the PowerPoint, and follow along. I guarantee you'll make money over time if you start to adopt some of the, let me just change that. I guarantee you'll improve your chances of making money, because I don't guarantee anything except that I'm going to go to sleep tonight at some point. The PPS indicator. This is John's proprietary indicator. I'm his buddy. I've got a computer in his trading room. We cut jokes, cut other things, for 4 or 5 hours a time when I can get into the office and spend the day with him. And I still have no idea what makes up a PPS buy or sell signal. It comes free in Thinkorswim. It's part of a package he sells for TradeStation. It's not in HGSI. It's very proprietary. There's a lot of different things in it. It's the special sauce that's hard to reverse engineer. And again, it's another indicator of momentum. I'll show you how I use it and how I scan with it. So every week on my reviews, I show you examples of stocks. I've had some classic blow-ups when somebody had bad news on a drug study. Again, coulda, woulda, shoulda. Sorry about that one. And then I've had some great moves as well. I'm not putting these out there so you take my trades. I'm not putting this out there to beat my chest. But I'm hoping week on and week out that you learn something, you learn about the setup, and you see why I make money with them. And some years, like this year, you can make a lot of money with them. Here's a couple of examples, and I'm just going to put it all together. This, for those who have not been here, don't click off because you just saw my chart. I'm going to tell you what's in it. Up at the top are 5 color bars. The top 2 are bongos. Remember those? The long-term one on top, the short-term on the bottom. And when it went from a long-term, look at this, it was in a sell signal from when it was up here at 45 all the way to this line here, and it went to a buy signal. So the bongo weekly kept me out of the trade. Now there were periods where the bongo daily for short periods of time went green, and every one of them you had retracements occurring, which would have told me when it went red again, that I had a shorting opportunity. Flip it, it might have been a buying opportunity. So now the bongos have both turned green. The force indicator, the 13 on the top, the 2 on the bottom, have turned green. The middle one is accumulation distribution. It's green. Gotta love that. Skip the next bar. That's for another lesson. Then I got 3 lines here. The first one that's clear is a Bible gap up. We didn't get one. Second one is the squeeze. So, my bongo just fired on the weekly. I'm in a squeeze. I had a Mobo breakout yesterday. Like that a lot. I come down here. These are pocket pivots. Wow, I had a pocket pivot, 2 pocket pivots in the last 3 days. I like that. We'll talk more about volume. My on-balance volume is starting to trend up. Like that. I had a kahuna down here. So now you should know from the last half hour what a bongo is: a force, a Mobo breakout, a squeeze, a pocket pivot, and a kahuna. Let me tell you the Cliff Note versions. Blue and green are good. Red is bad. So I got good, 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 and good. Then I look down here and I've got 3 moving averages. I got the 200 in red, simple. The 50 in blue, simple. On a black chart, my 50 is yellow. And the green, a 17-day simple. 200, 50, and 17. This magenta one is the 8-day exponential. This gray mark here is the group strength. You notice it's bottom and it's heading up as well. And then I look at the price action. Big downtrend. This is more of a bottom fish. This is not a pullback in an uptrend by any means. But I am in an uptrend. I did have a little pullback here with a pocket pivot. I broke above the 50. My bongos had turned green. I had a kahuna. That is a setup that I like. I took the trade. And what did I get? Here was the trading plan. This is what I show on my charts of the week. I define in this white line my buy point, my targets, my stop loss, how many shares I could buy. And then a week later, I had this picture. We ran up exactly to my stop. And what I do is I take half off on my target. We ran up to my target, my sell stop. I had pre-planned to take half off here. I raise my stop to break even, and then I let this puppy run until I get taken out by my stops. CCRN, not quite a pullback to free parking. But all of these are done on Friday on my weekend report, and this is the chart I'm looking at. Great earnings per share growth. Green up here, I'll give the yellow. It's yellow, but I like the green. I've got a Mobo breakout from a squeeze. I have a kahuna, so not quite as pretty. And I'm looking here. You see this red dot here? This is a Wilder PSAR. You notice that there's a green dot there. It's probably hard to see. That also had a Wilder PSAR reversal on Friday. And that's a trading system that Wells Wilder and many other people follow. So I've got a Wells Wilder reversal, a Mobo breakout from a squeeze. I've got a kahuna. I've got a stock that's pulled back, not quite to support, but I think it's going higher from here. I look at it in my John Person indicator package, and we'll go over this later, and I see a PPS buy signal on the daily, which is that arrow right here. I see the weekly on-balance volume going to the moon. Not a big signal over here, but it did have a recent weekly buy, and I decided to take this trade. Now, let me show you what else I've done in TradeStation. Remember my bongos? Top one is a daily, middle one's a weekly, the bottom is a monthly. You come down here, there's a spot for 7 dots. This one did not have a Bible gap up, that did not fire. It had a pocket pivot, which is that dot, a Mobo breakout, which is that dot, in a squeeze, the PSAR turned from green to green from red today, and it had a kahuna. So I basically have transported my HGSI indicators into TradeStation. I thought that looked like a good trade, and guess what? It ran right up to my target, which is the white line, and I would have taken half off here, which I did. Took off then I took the rest off after this candle here. I didn't hold it for the rest of the week. So I took my profits, and then I let the low close doji stop me out. Now, the low close doji, why is this a low close doji? Because I have a doji here the day before, and within 3 bars, I closed below the low of the doji bar. So a quick trade, but I made some money on both pieces of the trade. How about another one? And while I'm doing this, why don't you go look and then somebody type in what the price of CONE, Cyrus 1 is today. I love this stock. I wish I would have taken half off, but when they go wrong after a big bump, you're happy. Great earnings per share growth. Pays a 3.6 dividend yield. The date of this trade is August 17th, 2015. I was concerned because it still was red on the weekly bongo. Why was it red? Because it's been in a bit of a downtrend, so that was a negative. However, the forces had turned green today. It had a mobile breakout from the squeeze. It was sitting right on the 50-day moving average. It had a pocket pivot and a kahuna. I go, well, that's a compelling picture. So let's take a look at what happened. This is the day I said to buy it. It was the chart of the week, and it ran up to 34.5, a 10% move in 5 days. No one's done me the favor of told me what the closing price was today. I've been in it ever since. I think it closed at 54 today. This has been a great mover. Now, unfortunately, as I said before, I took half off at my target, but I made money on the other half. There's a beautiful thing happens when you take half of your profits off and you let the other half run and you move your stop up to break even. You can't lose on the trade except for a horrendous gap. And since I usually have a 4 to 8% stop when I take the trade, when I move that stop to break even, it has to go 4 to 8% plus for me to lose money because I've already made that 4 to 8% on the first piece I took off. I like protecting my nest egg, so should you. And basically here was Cone. I looked at it. It doesn't look that great, I have to admit, on the daily chart here. I did like my indicators from HGSI, which are down here. All those indicators are firing. Coming out of the squeeze, I took the trade. Here's what I said I would do. And again, the pop. You'll notice that I used to have these little circles instead of arrows. John fixed or updated his indicators, and now we get arrows. So, and then lastly, it still works in 2016. This is BCC, a beautiful chart for a number of reasons. Here's a stock that started moving up. It had a high closed doji here. I called it a high closed doji. It pulled back for a few days. Notice it's painted orange in TradeStation. It makes it easy to find them. It had a PPS weekly buy signal like that. So this is a weekly high closed doji, PPS buy. You notice that there was it's kind of a high tie flag in volume, but we broke above the trend line of the height of the volume. So we got a volume breakout. I've got a high closed doji on the weekly. My daily OBV is heading up. We're breaking out on my daily. We're not in a squeeze on the daily or the weekly. Here was my trade. I put 7.5% at risk. Put this out maybe 2-3 weeks ago, and we popped. Here was my buy, the white line, and we took off the next day. We touched the line and we went. Again, I took half off. I moved the rest to break even. Thanks, John, 5403 on Cone. I take the same trade over and over and over again. These are my favorite setups. I like a pullback to free parking. I've got a scan in HGSI that comes for free. I've also wrote the same scan in TradeStation. I like stocks that are squeezing right under a PSAR reversal. I don't know why it does that. Sorry about that. And I'm going to show you how that works. I'm going to show you in TradeStation how I scan for HCDs at support. And I'm not sure if I have time, but high type flags are a pullback in strength. So you think about a high type flag, the stocks run up a flagpole and then it pulls back a little bit. And when it breaks above the top of the descending trend line in that pennant or flag, it's a pullback. You take it on momentum. I also like to bottom fish off a long basis with momentum. I just wish some of you would have taken the TCK and the X trade when I took them. TCK will be one of my second time I made tons of money on that. And I put a buyout when it was like 360, and it's now at $14 and change, probably 3 months later. That was a bottom fishing. A couple of caveats. Know the market you're in. I don't buy stocks that have had pullbacks when the market is tanking because they typically keep going down. There can be a very real reason why the stock pulled back, so I take profits quickly. I always have stops, but I've learned the big money is letting my winners run. Let's go out to the platforms. And I've got a special offer on the seminar when I get back to it. All right. Just get my bearing straight here. Okay. Let's start with HGSI. So since I haven't done my review yet tonight, I'm going to do a real quick comment about the market. So I always go, because I think the market matters. I go into Woodward & Brown user groups full, major markets plus, and then I rank this using the T1, top-down analysis, force and bongo. And it shows me where the strength of the market. So for those that don't know HGSI, I just used a momentum of 1 day momentum versus 5 and then 3 weeks. The biggest influence is 1 day, and I've ranked 23 different stocks, ETFs, indexes. All right, Alan, I'm glad that should pay for you to come visit me again. So you have a number of different indexes that represent various parts of the market. NASDAQ's on top. Boy, when the NASDAQ's on top, if you're a growth stock investor, you're making money. I made a lot of money today, despite the fact the indexes were down. And I guess it's because I had some technology, biotech rebounded, and even though oil was down, some of my energy stocks looked okay. Weakness, oil, big stocks, weaker, commodities, biotech. It says down 0.7, but I thought my LABU was up a little bit. I'll have to go back and look. So let's take a look at some of the indexes just to get a sense of where we're at. And if they're marked up, it's from prior times. So I'm going to go off of this view because there's too much stuff I don't care about for my indexes. I'm just going to look at price, volume, and bongos. So again, imagine if you sell when the weekly bongo goes red and you buy when it went green. Well, that you saved yourself some pain. I guess that's good enough. You picked this up. You sold it up here. You avoided a lot of pain. And then you've been long ever since the end of February, and you've done very well. If you look during the uptrend, maybe you would have gone long every time the shorter bongo went red, showing you pullbacks in that uptrend. Enough. As I look at this market, and it's no different than I felt Sunday when I did my review, kind of a doji today on the S&P 500. It looks to me like we're losing some steam, and but Apple had it had earnings that were happy today. I don't know if I'd say they were great, so that may drive the market higher tomorrow. I know a lot of my AVGO was up after hours because of that as well. But all I could say is we've had a huge move. In fact, I can quantify that move. Let's just do that right here. I'll touch this one. I'll run it up to today's close. And it tells me we've gone up 20%. Well, that can't be right. In 114 periods. I guess that's right. In 4 months. We've gone up 20% off the bottom. I don't think we're in a bear market if we just went up 20% and took out the old highs. That's another important thing. If I bunch this puppy up, our old highs were down here. So we've taken out the old highs on the S&P. It looks like we're pausing here, but it could just turn out to be a pause and refresh. Maybe it's going to go higher. Dojis are indecision days. Stephen Bigelow still says If it opens up tomorrow, the stock's going higher. If it opens down, it's going to go in that direction. I think it needs to pause, but what do I know? I'm still very much to the long side. It's getting a little bit extended from the 200-day moving average. But one thing I did the other day was I looked at this move here was up 16%. Then our correction was in the neighborhood of 6%. And from that correction, we closed up 8.9%. We're only half of what this move was. There still may be some room left. So that's the S&P 500. Let's take a look at the Dow Jones, which probably looks exactly the same. Looks a little worse, doesn't it? Gave up a little bit today, but it closed near the top of the range. That's kind of a bullish looking. That might be telling me the market might be setting up to go higher tomorrow. So it gave up a little bit of steam. My bongos are still green. I think it still looks positive, but like the S&P, would it shock me to pull back some to the 17? It certainly wouldn't. Wouldn't shock me to pull back all the way to the 50, but I'm playing it like the market's still going to go higher, at least for this minute of my discussion. The NASDAQ. Woohoo, the NASDAQ is now getting to the highest in quite some time, but keep in mind that if I zoom back out, we're not yet to that point of the last summer high. We've got a ways to go. So it'll be nice when the secondaries confirm, but looks to me looks a lot nicer than the Dow and the S&P does. It looks like it's got more energy left. We shall see. And then the Russell, which was the weak sister, looks high base, looks like it wants to run again. I don't think this is a high type flag. It's not tight. It certainly is high. It's not trending down. It just looks like it's a high base and wants to go. So when I look at my indices, I feel I'm bullish. All right? I'm not stupid. I know that at some point we're going to pull back, and I protect my money with stops, but so far I feel kind of bullish. Let's take a look at the dollar. Why? Because I got a lot of commodity stocks. Dollar gave up some money. That's why I had a good day today. You notice it pulled back, almost tested the 200. This is going to be very telling. If the dollar bounces off this 200 and goes higher, I think my energy stocks, my steel, and my commodities are not a place that I'm going to want to stay in, and I'll probably get rid of them. If the Feds come up and talk up an interest rate, which I think they will do, I don't think they're going to raise rates. I think they're going to be scaring us with words. That could cause the dollar to go up, and that could put some of your commodities at risk. It's very important to know the dollar. Why? Because I bet some of you have been playing gold and silver. And gold, as the dollar is firmed up, gold has come back some. If the dollar rolls back down, then you've got another play coming in gold and silver, but I think they're going to be very dependent upon what the dollar does. And then lastly, the volatility that seems to have disappeared has moved up a little bit the last couple of days. Notice the bongos. According to my, not real proprietary because we give you what's in it, but somewhat proprietary indicators, VIX is still in a sell signal. When the VIX is low, look out below. Eventually the VIX goes up. When this VIX moves up, your portfolio is coming down. When the VIX high, it's time to buy, because when the VIX comes back and it spikes high, it doesn't stay there for long periods of time. That's when you make the big bucks. The VIX is low. I got to watch the VIX. All right, I'm bullish. Enough said. So this is about bottom fishing. So let's show you some of the ways that I bottom fish in HGSI. So the first thing I do is I start with a universe of all securities. And I told you my favorite setup is a pullback to the 50 with momentum. So if you have HGSI, you have everything I'm showing you. I find where it says here, Scott Kahuna Force, that means I've got a force and a kahuna that are firing, which means I have momentum. And it says I'm above the 200-day moving average, which means I'm probably in an uptrend. And then I can filter whether I'm within 1% or 2% of free parking. So I'm asking to show me a list of those stocks that are within 2% of the 50-day moving average. They are above the 200-day, so they're probably in an uptrend, and they just had momentum come in. My luck, these will all suck, but let's look at them and see if we can't find any potential targets. CNHI. Let's pull back my favorite view. So what do we see? We have a gap up. I'm not going to touch this. I'm looking at this gap here. It's a cheap stock, big volume. You know, it's probably something that's interesting. It just doesn't interest me. It's too loose. Red Hat. Let me look at some more because this one might. All right, so this is a stock that's been going sideways for some time. I'm probably not going to jump at it. However, I will point out a couple of things. I bet it's got a high closed doji. We'll look at it in John's stuff in a second. It's got a Mobo breakout from a squeeze. My weekly bongo turned green. It had a pocket pivot. It had a kahuna. Again, I don't see the uptrend here. I guess there's an uptrend and then it went sideways. So I'm going to put it in what day is today? Today is Tuesday. I'm going to create a group which already exists. And that group is called Trading Stocks Base. And we're going to call today Tuesday. And let's add it to Tuesday. And I'm going to create a group of stocks in HGSI. And I'm going to show you how I take that list into TradeStation. The next stock in this scan was Encana. A little bit more interesting. The daily bongo's red. That doesn't bother me because it stock's in a pullback. The weekly bongo has been green ever since about this point here. Would have been a nice time to have bought, wouldn't it? It had a kahuna today, and it's in a squeeze. I don't like the fact it had this mobile breakdown, which we reversed today. It's a oil and gas play. I'm going to find things I like more, so I'm going to skip it. Annaly Capital Management. Well, now we're talking about a pattern. I'm not sure I love the industry. But you might think with interest rates maybe moving up eventually, with less defaults, with banks starting to do better, that maybe holding mortgages is not toxic anymore. You may be like me and think that a 10.9% dividend yield is attractive. Not if my stock drops 20%. And then I look at a stock, it's green bongos, it's accumulating, the forces are green, had a mobile breakout from a squeeze, it's sitting right on top of that 200-day moving average, and it had a kahuna. And it had a recent PSAR reversal. So you know what I do with this one? I add it to Tuesday. We're going to look at it and make a decision later. I like this one. I don't love the industry, but maybe it's time to rethink that. Ascent Capital Group, kind of flat and doing nothing. Industry group on the last one, Annaly, looks okay. It's heading north. The industry group on this one is super strong. I just don't like the stock pattern. Allstate Corp, kind of been going down for too long, but it's a preferred share. I'm just going to go through Timken. This is a fabricated metal and hardware. Again, it's kind of loose. I see the group strength is great. The weekly bongo's red. That's a reason to pass. It's below the 50. It did have a kahuna and a mobo, but I don't like. It's not doing it for me. I'm going to skip it. Now, if this was a stock and not a high yield ETF, high yield muni ETF, I would tell you this is like an amazingly beautiful pattern. So let me tell you, this is an amazingly beautiful pattern. And why do I say that? Are we in an uptrend? Absolutely. Have we had multiple touches of the 50 where we bounced? Yep. Did we not just pull back and go sideways? Yes. Are we squeezing? Yes. Did I have a PSAR reversal? Yes. Did I have a pocket pivot and a kahuna? I'm going to forget that it's a high yield muni because I don't know anything about those things. And I'm going to click. I'm starting to build a watch list. It's the next one. All right. So we've now looked at all the stocks that made this list. Now, I could have looked at a tighter list, which would have been 1% above. And it's funny, the ones that we picked, a couple of the ones we picked are actually there. So that's the first scan. So this is a scan. Let me open up. That basically has two parts. In HGSI, the scans contain two parts. The first part is a filter. And this filter is saying last close above 2, 50-day average above 150,000, percent B change 1 day greater than 24, so it's a kahuna. The force 2 and the force 13 are both positive. The stock is above the 200, and it's within plus or minus 1% of the 50-day moving average. And then the other part of a view is the ranking module, and this is just a simple module. It ranks them from the top to the bottom by how much movement in Bollinger B and how positive the force index is. It's going to capture all of them. The rank is probably not that important. So that was very easy, and it allowed me to find a couple of stocks that made sense. A second of my favorite scans is this puppy right here, a PSAR reversal close at a squeeze. So why do I like that scan? All stocks have to be squeezing. So that tells me that some of the volatility has come out of that stock. The moving averages have moved close together, and we're probably pausing to refresh. The fact that the PSAR dot closed above the price tells me it also hasn't broken out. The problem with the last scan is the stocks may have already broken out. So I might be finding a setup here that tells me the stock is on the verge of a breakout, and I might be able to front run the rest of the crowd. So let's look at this scan. Let's see if anything pops up today. All right, let's take a look. Now, a lot of times these are takeouts because the squeeze part, and we'll just go through them very quickly if they are. So let's take a look and see what we find. So this is more of a yield play at 6.3%. It's a pipeline company. And, well, this is actually a beautiful representation of the Wells Wilder system. Every time the stock has gone from red to green on the Wells Wilder, it breaks out. From red to green, it breaks out. From red to green, it breaks out a short period of time. We've now based, we're in a squeeze, and we're right below that PSAR dot. Anybody want to bet that tomorrow the stock's going to trade, if it trades above that red dot and flips it to green, that we're going to start a little run up? Of course we are. Every time it happens, the same thing happens. Once, twice, 3 times, 4 times, all with a squeeze, it's going to happen again. Now, if I open up my little scorecard here, I look, the price closed at 55.97. The PSAR dot is at 57.92. If the stock trades above 57.92, that PSAR dot is going to reverse and turn green. So why not put a buy stop at 57.95? Now, the other thing is, where would I put my sell stop? Well, we'll look at it in TradeStation, but I don't have to give this one a lot of room. I'm buying it because it's in a squeeze. It's above the 50-day moving average. I might set my stop down at that 50-day moving average, which is, can't be I got to be on the right date. Never mind. Let me redo this. Closed at 56.44. The PSAR dot is at 56.67. So my buy stop is at 56.70. The 50 is at 55.52. I might look at this bar and say, let's just go the lowest of 4 days. That low is 54.3. So I could put a buy signal tonight, maybe I will, on TCP pipelines at 56.70. I'll put, if that fills, I'll immediately put a stop on at a few pennies below this bar here, which I said was at 54.03. So I'll put a stop at 15.04. Excuse me, at 54 rather. So a stop's at 54. My buy is at 56. So I'm risking about 270. I'm risking 4%. I get on a plane. the trade is made. I get off the plane. I'm happy. If the market dumps hard overnight, I never get taken out because the stock trades down. And the worst thing is it gaps and craps, I get taken out with my stop. It's a very safe trade. I don't necessarily like the group of pipelines or midstream. Maybe I do, maybe I don't. I love that setup. It's going higher. All right, let's put that into Tuesday. Spectrum Brand Holdings. I'm not going to go through the whole analysis. I'm just going to put it into Tuesday. Why? Uptrend, sideways. It's right above the 50. It was more than 2%. That's why we didn't hit it. Everything is green. I'm coming out of a squeeze. I'm right below that PSAR dot. Recent Kahuna. This one looks like it's going further. I might not buy it because earnings are in 2 days, but I love the pattern. Next one, Black Hills. Oh, look at that. Look at that. Another one. Now it's a utility. Boring, boring, boring. But run up, sideways, in a squeeze. Everything is green. Pocket pivot in Kahuna. Let's throw that into Tuesday. Buyout. We skip that. Buyout. Buyout. All right, so done 2 scans, and I found a handful of stocks that meet my favorite criteria. Now, one of the problems with what I just showed you is you want high flyers, you want momentum, you want excitement. I'll give you excitement. Let's show you one of the tricks in HGSI, and then we're going to move into TradeStation for a few minutes. There's this thing called smart groups in HGSI. I've got my own smart groups. Big volume and uptrends, MOBO breakouts, breakdowns, pullbacks, squeezes, Ian and Ron have some great ones, as does my buddy David Gallardi, and so does Morales and Catcher. So let's do a little cherry picking exercise. Tools, group inclusion report, and I'm not going to cheat and do one of Ron's that he's already pre-built for you. I'm going to start from scratch. And I'm going to identify my favorite groups. So I'm going to go into Gallardi because I love his sprinters. And in Ian's groups, I love best criteria. I love best of Woodward and Brown, best stocks under 15, demand, higher, growth, HGS 100, high profit market leaders, leaders raw relative strength, LLURs, quarterly EPS accelerators. Oh, this is so much fun. Stocks and groups moving to the upside, big ones and little ones. EPS strong. Then in my group, what do I like? I like the volume plays. I like breakouts from a squeeze. I like pullbacks to the 50. Squeezing potential PSI reversal to the upside. Awesome. Morales and Catcher. I like his Bible gap ups. I like his code blue, which are a bunch of his buy signals. And I like his pocket pivots. And then I'm an O'Neillian. I have Investors Business Daily. I got Market Smith. Let's get the stocks at Market Smith. And I like Ron Brown's perfect speculator buys. I only want to look at 15 stocks, so we're going to call this Web Gems. And this is 7.26.2016. We want 15 stocks. So the hypothesis is I just picked 10 or 12 great groups. I know from historical perspective that the high Momo, the exciting stocks of the day, end up in those groups. If a stock ends up in all those groups, it's probably a great stock. So let's see. Let's hit OK. Just call Web. Let's hit Save. Now the program's going to show me, are there any stocks that showed up in a lot of groups? Look at this. These are the big Momo players right now. Let's take a look at them very quickly. I can do that slower for you later. Where do we called it what? We called it Web Gems 7/26/2016. Let's look and see what we came up with. I'm going to go through these 15. Put your questions in. I'm watching the question box. NVIDIA, lower left, upper right, clearly the leader in the market right now. The kahunas are green. When did you want to get into this stock? You want to buy the stock here. Of course, I couldn't have bought it this day because I do end-of-day buying. The next day it had a Bible gap up, mobile breakout from a squeeze. Everything is green. It had a kahuna. Actually, it went weekly bongo went green all the way back here. This would have been obviously a great point to buy the stock. Right now it's extended, even though it had a pocket pivot. It may run a lot more. You can buy it. I don't buy stocks that look like this. There's too much risk. Maxilinear, I'm in this one already. Why? Mobile breakout, broke above the 50. This is a eureka, big day in the market, and a kahuna. Like the last one, I'm concerned that these are higher risk stocks because, I mean, this one is right, well, maybe it's breaking out of that trend line, which I didn't draw that well. Earnings come out August 8th. It probably pops tomorrow because Apple's numbers were good. Maxilinear, I think it's not the best time to buy. NetEase. Unfortunately, this is the story with the Momos. Yes, you can buy these stocks, but you're buying much higher risk stocks, and it may be tougher to put a stop. Next one is Microchip Technology. Must have had earnings, or nope. Everything's green. Big move today. Kahunas. A pocket pivot. Time to bought this stock is back down here. Kahuna broke above the 50. And this would have been a pullback to the 50 within 1% and a kahuna force. So these are too late. I don't like buying these stocks. Edward Life Sciences, not too late. This was its Bible gap up here. It actually closed below it, so that would have been mitigated. It's gone sideways enough. Everything is green. It had a couple of pocket pivots. I'm interested. It's still a little bit extended. I'm throwing it into Tuesday. No questions. Okay. Next one on my list, Acalero. Up, pull back. Here's where I want to buy it. I didn't buy this one. It was probably too cheap for me, but it broke above the 50, still had a weekly bongo red, which is a flag to me, mobile breakout from a squeeze and a kahuna. I would have bought it then. I think it's gone too far. LGI Homes, I don't even want to talk about this one. I got stopped out of this one and missed the run. Shit happens. What a great run. It's extended already. I'd rather look for things like this right here where it pulls back to support. Well, it pulls back to support. Here, too far away from where my stop's going to be. I mean, this is a 10% plus stop if I pull back to this point. Not for me. It probably goes higher, but it's higher risk. Vascular Solutions, pull back to the 17, broke out today, Bible gap up. Maybe still buyable. You'd have to read Morales and Catcher's book to know what the rule set is about Bible gap ups. A.O. Smith, well, I'm going to put this on the list. It's not overly extended. It broke out today. Everything's green. Mobile breakout, pocket pivot, and kahuna. The whole thing on this one will be what's the distance from my stop to my buy if it's within 4 or 5%. This was a reasonable time to buy it. Wouldn't I like to pick this stock up on the 50? Pick the stock up on the 50? Pick the stock when it broke above the 50? So what do? I have a watch list of great stocks that got killed, great fundamental stocks. Like today, I bought Mobileye after it got down about 43. I don't think I made anything on it today, but it was a good place to take the trade. And when stocks fall because the market falls or they miss some news, and I can pick them off at the 50, I like them. I don't like them extended. Ligand, I've looked at this one a lot. Sort of a cup, a handle, and a breakout here. Not overly extended. Everything is green. That might be one to consider. In Lennox, I looked at this over the weekend. I thought it was already extended. It had a big move today. I just personally have a difficult time buying a stock that's had a big move like this. I want to wait till it pulls back and then take it then. I would have said the same thing right here, and then I could have picked it off when it pulled back into the 50-day moving average. Monolith Power, not perfectly tight, but a nice gradual move up. Pocket pivots, everything is green. Same story. These show up on my list every week, and I kick myself for not buying them. I like to buy them off of support, not when they're running away. Beat, Paycom, I have this one. This was one that I sold too quickly. This was one of our charts of the week. What a great performer. Its earnings are slowing down. So that little trick called the group inclusion filter is one of the ways that I'm able to find some of the leading stocks, although many of them are extended. So a great question came in, and I'm going to respond to it. So on LGND, Ligand, on Ligand, the high jump up here is not high enough for me to be concerned about. So I didn't teach you today about the high jump. But I see and I make a comment about extended. Wouldn't it be nice if there was a mathematical tool that would show you an extended stock? We have one. It's called the high jump. When this line here where my arrow is gets to the top of its range, it tells me it's more extended than it has been for the last 200 bars. So we saw that occur right about here. And what happened to the stock? It pulled back. Now, to be fair, it gave the signal for several days. So if I get back and I touch the top again, I'd be nervous. Some of these, NVIDIA is pegged. It's high jump bar. It's extended. Microchip is about pegged. It's high jump bar. So I spend a lot of time looking at the high jump bar. So I've given you 2 scans for finding pullbacks and what I think are reasonable setups. I showed you how I use the group inclusion filter for finding the leading stocks. Now let's go into TradeStation and show you my secret weapon. My secret weapon is a couple of them. One of them is buy signal 2. Read what buy signal 2 is. A buy signal 2 is a daily buy signal occurring near pivot support when the weekly is in a buy mode. So that tells me the stock is in a longer term uptrend. The weekly stock is in a buy mode. That it's pulled back to support. You've heard that before from me. And it had a buy signal today. So let's see if any of these looked interesting. CCL, Carnival Cruise Lines. Oh, don't tell me that's yesterday's scan. Didn't I? All right, hold on a second. It is yesterday's scan. Hold on, I thought I just restored these. I must have restored the wrong one. Dum. No, it did not. So those are the 26th. All right. Well, we're going to have to give me some forbearance then. A buy signal 2 is, I'm going to run the scan and open up yesterday's and look at yesterday's. These are stocks that I said are in a weekly uptrend that have pulled back to support and gave a buy signal today. So let's look at one, log me in. So today, this is yesterday's scan. Now, I didn't make this one up, guys. This is in the scan 725 that I ran last night. What do I have? I have a stock that's in an uptrend. Here's a monthly chart. Here's a weekly chart. Here's a daily chart. So if we ignore today's bar, we had a stock that's been pretty much going sideways for some time. We had a volume OBV on daily and OBV on weekly that are clearly going up for a period of time. That would be John calls it a convergence. A lot of people call it a positive divergence. It's in a weekly buy signal going back for a couple of months, since April. That little arrow there. Yesterday, it showed hold on a sec, my bad, a daily buy signal yesterday. So had I been doing my homework and I was a smart man, I would have said, log me in, is in an uptrend. It had pulled back to support, pivot support, and it gave me a buy signal. And the pivot support is this right here. The prior bar was on support, and it's moved off support with a buy signal. That was a very strong buy. Anybody want to go tell me what the current price after hours on Log Me In is today? I haven't looked, but I have a feeling I know what the answer is. How about $82 between after hours and previous hours? Steve Mayer, it closed up 6% today at $69.71. It is trading at $82.06 after hours. Holy shamolis is what I would say. How did John know that a day ago? I don't know. His stuff works, folks. What a great call that one would have been. I wonder if he called it in his room today. So rocketing why it got taken out after hours by Citrix. NetEase is one that I think showed up on the scans today. I believe it was in our scan list. And we have an OBV going up above the moving average on daily and weekly. You have a buy signal came in yesterday. That's why it made. So I have a long-term uptrend, pull back to support. Remember, this is a buy too. And the support is hard to see in there. And then I had a buy signal come in. And then the stock went up today and made our buy list tonight. So we got today's answers. Let's see if anything, we got a lot of them. So you know the market's strong when I see this. So I might do this. I might say, are any sectors? Lots of financial stocks, energy. So these are the sectors and how many they had that made the buy signal 2 for tonight. So let's look at a couple. FMC Corp. It's in the energy space, if I'm correct. Oh, I love what's coming next. Oh, so happy. So we have a stock in an uptrend. It's in a weekly buy. OBV is strong weekly and daily. It's above its moving average. Buy signal came in today. That looks interesting. Newmont Mining. Again, all of these are sitting within the percent of pivot support that he requires. Had a buy signal come in today at the end of the day. I have to look at my favorite player of the week, TCK. TCK had a high close doji today and a buy signal. OBV just moved above its moving average. On the daily, weekly, it's strong. Let's take a look at TCK. And let's kind of figure out where I gave this to you on the weekly. It's going to be hard to see. I may have to go back to HGSI. It's been a while since I gave this stock out. But this will be one of my best calls that I've ever done for an audience. It's been back a while. And the story I told you was pretty simple. I ran the stock from $4 up to $40 in March of 2009. It hit 437, 442, 461. I believe, let's see if we can figure out when I bought it. Close your eyes. I have way too many positions and you don't need to see them. And what is my buy price on this? $216. What's the date here? 212. So I didn't buy it the same day I told you. I was a little slow. This would be, that must be the day I bought it, the next day. All right, so I told you to buy it here. I bought it the next day, and this stock has had a hell of a run. It's gone from 460 when I bought it to, it's now 14. I'll take that anytime. So here's a scan that I'm able to customize that's buying a stock that met my criteria. Any others that I want to look at here? There's a lot of energy stocks here. MGM, a casino stock? That makes no sense. Yes, it does. Look at this. MGM, let's just take a look at what I see on this chart. MGM has been basing for some time, going sideways. It had a high close doji yesterday on the daily. OBV is above the moving average on both the daily and the weekly. It had a PPS buy signal Friday. This is this week, so it doesn't count yet, but we had because the week's not over, but it did have a buy signal on the weekly. Today it had a buy signal on the daily. All my bongos, daily, weekly, and monthly, are green. And if I look at this, I know that I have a pocket pivot, a pocket pivot, a mobile breakout. There's no squeeze. The yellow bar is not there. The PSAR is underneath, and I had a kahuna today. So it's just out of curiosity. Let's see if I know how to make an indicator. Everything's green up here. Mobile breakout, a pocket pivot, and a kahuna. What I don't have is a squeeze and mobile breakout. So I basically brought all those indicators here. So you think I might want to go look at building a buy order around MGM? I don't know. I may. Take a look at Wynn today. Tell me what you think about casinos. Richmond Mines, I don't know this stock. I don't know what this stock did. Ran up. Definitely pulled back a couple of weeks. Had a buy signal today off of support and a squeeze. So I'm preaching my same thing over and over again. I hope you see that that I am different platforms, same thing. I've just had some great questions, so let me take a breath, take a drink of my soda, and then I'll answer them. So MGM, am I bothered that the monthly OBV is so lousy? Yeah, but not. I'm going to be overridden by the daily and the weekly. The buy signal came in, and the fact that here's the group strength has taken off of late. Macau last month, for the first time in ages, had positive year-over-year numbers. Their comps may be getting better. Maybe things are getting better there. I think casinos look good right now. We just pop onto this side here. Type in Win. This is the one that I've been playing, and I bought it when it pulled back into the 90s. And it's popped up here the last couple of days. Never mind. That's a 5-minute chart. Pretend you didn't see that because I was wondering why it made no sense. Here we go. Today we had a Bible gap up. Wow. On Win. High closed doji. It doesn't count. It's in an uptrend. Bible gap up. Pocket pivot. PSA supportive. It had a kahuna. It had a new weekly buy signal off of. Win looks super strong. So MGM's in the same group. I just have a feeling, and Las Vegas Sand popped as well. So it's a group working together. So the other thing I wanted to show you here in my scans, and please bear with me a couple minutes if you're about to jump off because there is a special offer I want to show you, and then I'll look at any stocks or answer any questions that people have. The other thing that I like to do is look at high closed dojis. And I really spend most of my time on the weekend in this group here. And it's not going to change until the end of this week. And these would be stocks that are, at the end of the week, had a high closed doji. Now, remember, it's the end of the week last week. So that's not going to help me. So these are all stocks. So let me see if any of them were stocks that I picked for this weekend. Some really good stocks here. Talk about, yeah, it's not that good. MPW, Limited Brands, Humana. So when the key thing on the high closed doji scan and where I have to be careful is it only counts if the stock's in a downtrend. And remember, we're not looking at today's bar on the weekly, we're looking at Friday's bar. Uptrend, I don't care. Abercrombie & Fitch. Okay, stop the presses. We found one. That was easy. So, retailers have sucked until recently. They're starting to turn around. Here's a stock. Is this in a downtrend? Hell yes, it's in a downtrend. Even my mother would see that. It's in a weekly buy signal. Cool. It had a high. Pretend that we don't have today's bar. Because I'm not. We have last week, it finished with a high closed doji. And occurring right on support. Its OBV crossed over its moving average. Now, the monthly bongo, the first two are weekly rather. When I switched from daily to weekly, I can't look back to the daily. I can look forward over here. So the daily and the monthly are green over here. The weekly was red on the bongos. So it's not perfect because it's been in a horrible downtrend. But this looks kind of interesting to me. So I might now go backwards into HGSI and take a look at the chart for Abercrombie and Fitch. And I basically will look at every one of these stocks on Friday. Well, you tell me what you think. The Bongo Weekly has been very effective at telling me to stay out of the stock. As I said before, it reacts late. We've had a zillion pocket pivots as we moved off the bottom. We just broke above the 50-day moving average. I know I can set my stop probably a little bit below that 50-day moving average because I don't want to be in the stock if it breaks down below the 50. So I'm not going to be more than 21, 20. I'm probably about 6% on my stop. I may take this trade. I like this trade. I liked it better yesterday. I would have picked up today's gain. So I found one by looking backwards. Now, one of the questions somebody asked me was, how do I take a list in HGSI? So let's find Tuesday. These were the stocks we picked. A lot of junk in there. Let me clean out the junk. The junk is my indexes that I don't really care about. And I got my indexes out. So now I'm going to go in here and I'm going to do copy to clipboard text column. I'm going to go into my advanced screener, which is just what I call it. And I'm going to add it after win, the stocks. So I'm going to look at these very quickly in a moment. So I'm going to come back and we'll look at the ones we picked today. And I want to go back to my PowerPoint. So I wanted to just call out that everything that I've done today, I will teach ad nauseum at my seminar on Friday, except I'll let the maestro, John, teach his stuff on Saturday, Sunday, and Monday. It is, I mean, I paid for him too. It's a great meeting, John's meeting, and I do my meeting because I've got a lot of HGSIers that have joined the PUG group with John, and I don't want them to feel like the HGSI part's left behind because, as you see, I use both parts in my trading. $400 for my meeting if that's all you're doing. $300 if you're going to John's. John's is $14.78 at personsplanet.com. You can also email me. So here's a follow-up. If you want to have everything that I've shown you today, again, let me say this again. I make $0 if you do this. I lose money. I lose money if you take this deal. And I'm not being crazy Eddie and I'm not lying. Why do I lose money? Because I put my indicator package in and I basically make it zero. So you get my seminar, John's seminar, my indicator package, which I've sold for the past for $500 to $750, John's lifetime indicators and PUG group for a year. If you add it all up, it's $58.78. I can get at least 20% off. And if I get 3 people who want to do it, I can get 30% off the package. And you'll get my indicators immediately. You'll get John's immediately. And I guarantee you, if you do this, sorry about the sound breaking, I guarantee if you do this, you'll leave on the 26th a much better trader. That's it. As I said, I get $0 of this. I am underwriting the discount by giving away my indicators and a bigger discount on my meeting. Why? Because I want to help grow my PUG user group, which does the things that we've talked about today. Let's go back into and let's look at the picks that we took today. Annalee Mortgage Company. All right, so here it's already broken out a little bit. It's in a weekly buy. OBV is broken above moving average. On the daily, OBV looks good. It's in a daily buy. I should have bought it down here when it had a high closed doji. I think Annaly does look interesting. Again, you have to know the group you're buying. We like BKH, which was Black Hills Corp, which was a utility. OBV, no shocker, through the moon on the utility on the weekly. On the daily, I don't like it. It seems to be losing steam. I probably would pass because I don't like the OBV. I can find something better, but it isn't a PPS daily buy. Edwards Life Sciences, they make some interesting heart valves, etc. Looks interesting. OBV weekly, super strong, and daily, super strong. PPS weekly, PPS daily today, had a high close doji on Monday. Certainly looks interesting. It's an expensive stock. It's given us a base here only for 5 or 6 days. It's in healthcare, which there's probably political risk. I like this a lot. HYD, that was that high yield ETF. We liked it because it met my criteria for a pullback to the 50 and momentum. So we got a weekly OBV that looks incredible, a little bit of a flag here, and we broke above the top of the flag today. That's nice. It's in a longer term weekly buy, trust me. It went into a daily PPS buy today on John's indicators, and OBV is going up. And I've got a pocket pivot, I got a mobile breakout, I got a squeeze, a PSAR reversal, and a kahuna. So if you want to play high yield ETF, 32 bucks, this looks like it wants to go higher. Be careful, Fed announcement in 2 days. Ligand, we talked about that. We called out the high jump being high. These red dots here are MACD divergence, or it tells me to look at it. That's enough for me not to jump into the stock. It tells me it's extended. And frankly, if I look at John's histogram, stock has gotten higher. I haven't taken out the highest highs of his histogram back here, so that's divergence there as well. I would pass on that one. Red Hat. Red Hat looks compelling. Its OBV broke above its moving average today on the daily. The weekly looks strong. PPS weekly and PPS buy signals fired today. Ignore the thing on the bottom here. Bongos, the weeklies are still red. That's bothersome. I think we saw that in the chart. But I like what I see, and I might be chasing after Red Hat. Well, not chasing, but I might be looking at it some more. And then A.O. Smith was one that we looked at. Bible gap up today. Don't buy this until you read Morales and Catcher. Mr. Reddy, I've seen you ask that question. I can't tell you. It's proprietary what moving average John uses, so he doesn't tell people, so I won't tell people either. I figured it out, but I don't want to share something that he didn't tell me I could share. There is a trading system with Morales and Catcher of how to handle viable gap ups, but it did have a PPS buy today. Everything else looks great. And you notice it's got 3 dots above the squeeze hole because of the viable gap up. When I say I throw in my indicators, what does that mean? It means you get my bongos, but you have to pay a third party 60 bucks so that he gives you all 3 time frames on a single line. You get my dots here, which are the 7 indicators, or 6 indicators I use, 7 indicators. Bible gap ups, pocket pivots, mobile breakout, squeeze, PSA reversals, kahuna force, and red candle high and green candle lows. You also get my scanning tools, which will look at the same things in Scanner. So they show up during the day. And you also get the chart, regular charting indicators as well. I throw that in just to sweeten the pot on the deal. Let's go back to finish. Spectrum brands, I like that a lot. It's been in a buy signal for a couple of days. OBV is strong on the daily. It pulled back and is moving back up on the weekly. This is expensive, and so was Stars when I bought it. Doing the same thing. Sideways to the moving average support. Had some momentum come in. Spectrum Brands looks interesting. And then that pipeline play has been in a buy signal. It's sitting down here where my arrow is for a while. It's in a weekly sell. I'd pass on it. If you remember, I was lukewarm. So what I wanted to show you is I was able to put together my favorite setups, showing you how I find them in HGSI. I showed you some of the things that I do in TradeStation. And again, with TradeStation, I really look at those specific scans for high close dojis, and the buy signals are as PPS buy and sell. In the trade station, you can also, in radar screen, you have firing during the day on daily, weekly, monthly, and quarterly signals, John's high and low close dojis, which I find extremely useful in my trading. And lastly, for completeness sake and not to ignore anybody who trades with other platforms, what can I do in Thinkorswim? I can do a lot in Thinkorswim, but I don't have high close dojis. And let me give you a hint. I've tried to create them myself because there's not rocket science into what goes into them. I've had Thinkorswim coders do it for me, and I can't get them to match up right. But I can look for PPSs, so I have a scan here that's called load scan query. And I have one PPS buy with weekly increase of OBV. So I'm looking for stocks who had a PPS buy today and their OBV is increasing. Look how many stocks we had. We had 58 stocks today who met the criteria for a new PPS buy and rising weekly OBV, so potentially convergence because the PPS buy comes in at a turnaround. Well, there's our Edwards Life Sciences that we've looked at. We looked at, I think Beat was one of the stocks that I passed on when I looked at it before. Paycom, I mentioned I already own. Here's Red Hat. So you have the ability to scan for PPS signals within Thinkorswim. And this is a proprietary indicator I have that shows me money flow into institutions. And these will be the ones that I would probably be concentrating on because not only did OBV increase, I have institutional buy effective volume per se on those stocks. So something else I could tell you, if you participate in the package, and I'm not hard selling, remember I don't get anything, but I like having people at my meetings, the more the merrier. I'll throw in all the HGSI indicators in Thinkorswim, which have been given to us by the Thinkorswim Codemeister Bob Meager, the HGSI community, and that includes the MOBOs and a lot of the other things that we did, the Bible gap ups and the pocket pickup pivots. And if any of you think you can code an HCD, I'd love to see it because it doesn't help me or help you unless it works. And the only way I know to get the whole package together, my things and John's, is to buy John's Lifetime Indicator. I recognize that it's a big expense. Mary does, I think, have a payment plan. And stick with my webinars. I'll throw you some things out on a regular basis. But I've had it fun. I think I've answered all the questions. I'll give a couple more minutes. Thank you for taking time with me tonight. I will post this. And again, I appreciate the support you guys have coming to my live meetings and watching my webinars. All right. Do I still use seasonality? What's the best program? JG, I got to go to it because of the week. Yes, I use seasonality. I won't tell you the best program because of a simple reason. Historically, I thought the best program was Magenta Trader. Then Magenta Trader had some challenges, and it's now web-based. It's getting back to where it was. It still has, it's getting close. The old Magenta Trader became Seasonality Trader and has improved as well. And Best Choice, which has sort of been steady Eddie and not changed much in the last couple of years, has been acquired and is coming out of the cloud-based Best Choice. You got 3 good programs. Let's look at Apple first and look at some seasonality. Yes, I look at seasonality. This is Apple stock. Let's look at earnings seasonality where it matches up earnings. So what does this tell me? It tells me that earnings came out after the bell tonight. That's the earnings signal. It tells me that over the last 10 years, 7 out of 10 times it's traded up the day after earnings. It's also told me that between July 19th and August 31st, it's up 7 out of 10 years, an average of 10%. This big green area tells me it's going higher. The yellow line is a 10-year seasonality. The green is a 10-year. So Apple on this quarter's earnings has a history of performing well, and it did it. Let's look at Amazon. Let's set the earnings to earnings on the seasonality. Amazon is iffy over the next couple of days. Its earnings come out, I think, tomorrow or Thursday after the bell. I think it's Thursday. This tells me that Amazon doesn't have a good pattern, that it's really a plus minus in my mind over the next couple of days. However, in August, we enter a period of time between August 12th and September 23rd for Amazon where it's the best of it's up 10%, 9 out of 10 years. Now, very quickly, I could pull up Magenta Trader, and I'm going to look at Magenta Trader and see what it says about Amazon because I got a big position. It's currently collared. I want to see if I want to take some profits on my collar. So let me go into this. See, I prefer applications, not web-based programs, but maybe I'm just old-fashioned. AMZN. And it basically, variable scanner. So it shows the same thing, 10 out of 10 years, 10%, and it shows it starting August 4th. So Magenta Trader says the best time to buy this would be in about a week. And if you look at from today and you look at a 30-day scan, it's up 7 out of 10 years, 4.4%. But it's down 7 out of 10 years, an average of 4.4%. If I look at just over the next week and I put it on today's date, it looks like it's down 6 out of 10 years, an average of 8% down. So Amazon does not fly on this quarter, so you might want to be careful there. Amazon's about to go through a period of time, though, where I think Amazon's going to become even more exciting. It's got a lot of upgrades, and the reason why, besides the fact I have a big position, which I said is collared because of those numbers, Amazon, look at the forward-looking earnings per share growth on Amazon and HGSI going forward. It has a huge multiple, but if it actually has a growth rate bigger than the multiple, maybe Amazon's going to actually go higher. The other one that's popping now is Facebook. They have earnings coming out as well this week. And Facebook hasn't been around as long, and you could see red here. So for the 4 days after earnings here, Facebook averages down 4 out of 4 years, 8.3%. So if I look at 7 days from today, it's, well, here it doesn't look so bad, but here it does. Down 3 out of 50-50 over the next 4 days, and actually shows up 8.2% average. But look at the next 7 days there from today. You got a plus 36 and a plus 3, a minus 15 and a plus 15 and a plus 1, a minus 3 and a minus 36. So clearly for both Facebook and Amazon, although I'm long both and hopeful on both, I think that both of them, these are not their best seasons for earnings. And you could see Facebook is big red. Hence, I'm also collared on Facebook. So I had a CWST, so let's look at it. CWST. Its earnings are coming out now, so let's switch it to earnings seasonality, which just matches it up. This is one where it looks funny because there's a pretty dramatic change, but it's basically set the earnings date. So it's pulling back hard in an uptrend. It's in a seasonally strong period of time, kind of, sort of. It's 6 out of 10. And let's go look at CWST and HGSI. Well, is this kind of, sort of, a high tide flag. I'm being loose with my definition, but kind of, sort of, is it? We have a really quick uptrend. Now we've got, I'm going to switch it just to a skinny line. We have one of those. And we've got earnings coming. I think that I need some momentum. I need a directional change. Maybe that was today with the bottoming tail going down to the 17. This guy's going higher. Question is whether it goes up higher off of earnings or it stays in this pattern for a while. But it looks like a high tide flag to me. I love this setup. All I need is a break above the trend line and maybe some momentum. Let's just look at TradeStation. And yes, do I have analysis paralysis? Sure I do. I've got 14 different monitors in front of me. I've got all these different programs, but I trade the same style regardless of what program I'm looking at. I'll say the same thing. You've got a PPS daily sell. OBV still looks strong. Weekly, I need to see a switch. This is one that I'd be watching in my person radar screen. So I'd be sitting there during the day, and I'll just put it in there. So I would add, it's not really a sell. This is not necessarily this past week, CWST, and I'd be watching. And what am I going to watch for? I'm going to watch for an HCD, or I'm going to watch for a flashing green, and then I'm going to know it's the right time to buy intraday. I do have everything, RC. Just don't tell that to my wife. All right, it's been forever. I can't believe you guys are still on. 2 hours is an hour and 46 minutes. Hopefully you learned something. Hopefully you see the power of the tools. It's not the tools. You have to learn the story behind them. You have to learn how to use them. I sat with him on my computer for a long time. How are you going to learn? Get some education. Go to John's seminar, whether you buy his indicators or not. He's brilliant. I learn a lot from him. Watch my webinars. Thanks for coming. And trade safe, and good luck the rest of earnings season and beyond. Good night, everybody.